Hey everyone, thanks for checking out this video. My name is Travis Rose. I'm the creator of the Master the Market education that you can find linked below in the description. And this is going to be part 4 of the Day Trading Stocks for Beginners series that I'm doing here on my channel. So if you're brand new to the market and you want to start off with the basics, I recommend starting off with part 1 and gradually going through the rest of the parts because it's going to gradually get a little bit more advanced in each part of this series. So anyway, in the last section, we started talking about some of the basics of technical analysis, which is of course things like candlesticks, chart patterns, chart indicators, and so on and so forth. And now in this one, we're going to go ahead and get into what is known as fundamental analysis. So fundamental analysis is the analysis type using a business's financial statements. This is going to be your revenue, operating expenses, net profit, and so on and so forth. Anything that you find on a company's balance sheet or within their SEC filings is really going to have to do with fundamental analysis. And with that being said, fundamental analysis is generally going to be used a little bit more for longer term investing. But as day traders or even swing traders, it's still very important to know some of the basics of fundamental analysis and to actually do some fundamental analysis before you place your trades. Now, with that being said, some of the websites you can use for fundamental analysis are sec.gov or BAMSECcom for things like your SEC filings. And then you can always just use something like Yahoo Finance to look into a company's recent news or press releases. So personally, this is actually how I do all of my fundamental analysis. I use BAMSECcom to look into their SEC filings. And then many times I'll go over to Yahoo Finance to look into recent news and press releases. And I actually do this before I place every single one of my trades. And then of course, I'll go ahead and move on to some technical analysis, which is going to actually help me find the best entries and exits on my trade. Now, when we're talking about fundamental analysis, there are quite a few different filing types that you're going to see when you're looking into SEC filings. So without overwhelming you, I wanted to go over some of the most important ones and some of the ones that you're going to see most commonly when you are doing your fundamental analysis. And the first of those is what is known as a 10K filing. And this is going to be an annual report required by the SEC that gives a comprehensive summary of the company's financial performance over the past year. So in short, these are the annual earnings reports that the company puts out once a year, going over how well that company performed in the past 12 months. And if you stay tuned later on in this video, I'm going to go over to BAMSECcom and we're going to go ahead and look through some of these different filing types. And I'm actually going to give you some ideas of what you want to look for in these 10K and 10Q filings that will help you determine whether the company is performing well financially or if they're struggling financially. And because of that, their stock is probably going to struggle to perform well also. Anyway, the next filing type that we see very often is a 10Q filing. And this is a little bit different from the 10K because a 10K is again released once a year and is going to be the performance over the past year. And the 10Q stands for the quarterly earnings report, which is, of course, the quarterly report required by the SEC that gives a comprehensive summary of the company's financial performance over the past 3 months. And the next filing type is the 8K filing, which is different from the 10K and the 10Q because this is actually not going to be an earnings report. Anytime you see an 8K filing, that is a filing notifying investors of important events or news released by the company. Okay, so anytime a company puts out news, for example, maybe they got a new patent on one of their products, maybe they have some kind of news from the FDA about one of their drugs or treatments, or any kind of news along those lines, that is going to be put out in an 8K filing. So like I mentioned on one of the previous slides, you can always go to something like Yahoo Finance to find press releases and news, but realistically, you can actually just stay on a website like sec.gov or BAMSECcom and look for 8K filings, and those are going to be any recent news or press releases put out by the company. Now, moving on from those filing types, there's another thing that you always want to look for when you're looking into a company's fundamentals and when you're actually diving into their actual filings themselves. And that is what is known as dilution. Dilution essentially decreases existing shareholders' ownership due to the company issuing new equity. Basically, what that means is dilution can be a big red flag if you're planning on buying the stock, even if it is just for a day trade. On the other side of the spectrum, dilution can actually work in your favor if you're somebody that is planning on short selling the stock. And the reason for that is because dilution is going to drive the price of the stock down because all of this new equity is being sold into the market. And that is, of course, going to add to the supply. And since the market moves based on supply and demand, all of that extra supply is going to push the stock down and down and down. And as a short seller, you're going to profit from the stock actually going down. So, of course, in that case, dilution would work in your favor. Otherwise, again, it can be a red flag and should probably tell you to stay away from the stock in general or look to actually trade the other side of it by short selling. Now, with that being said, there are a few ways that you can look into the company and see whether or not they're actually diluting or if they have a history of dilution. And the first of those is to go back and look into the SEC filings. One of the filing types that you're going to see that can indicate to you that the company is diluting or at least has a history of dilution is an S3, which is known as a shelf filing. So a shelf filing states that the company may offer to sell a specified amount of shares, warrants, or other security types. So in short, this means that the company can dilute in the future. Okay, then following the S3, you're going to see something like a 424B3 or a 424B5 filing, and these are going to be required by the SEC in order for the company to actually offer shares to dilute. So generally what you're going to see is an S3 filing stating that maybe the company may sell up to $100 million of shares over the next 5 years. Now, in order for the company to actually start selling those shares, they have to put out a 424B3 or a 424B5 filing, and generally that's going to say that they are offering to sell maybe $20 million worth of shares in this current offering. And because in that offering example, they only sold $20 million worth of stock, that means that there can be multiple other 424B3 or 424B5 filings to follow up with that S3 to sell the extra $80 million worth of shares that they're able to sell based on their S3 filing. Okay, so I know it can be a little bit confusing, but trust me, even if you just know the very basics of whether or not the company is diluting shares, that's going to put you at a big advantage over a lot of your competition. And at the end of the day, it's probably going to keep you from buying heavily diluted stocks that would probably end up turning into a loss. Once you begin to understand dilution a little bit better, you can actually just look at some of the stock's longer term charts, like the one we have here on this slide, and you can get an idea for whether or not the company has diluted in the past or is even currently diluting. So if we take this example here, we have the stock DPW, and we're looking at the 1 year, 1 day chart. So this is the entire year, but each of the candles on the chart is only representing 1 day of price action. Now, when you're looking at a long-term chart like this, one big red flag that can indicate to you that the stock is diluting is first that the stock is in a major long-term downtrend. You can see that early on in the year on the left side of the chart, the stock was well over $10 per share, and at times it was even all the way up to $14 per share. And on the right side of the chart at current day, when this screenshot was taken, it's all the way down to $1.66. Now, a long-term downtrend doesn't always mean dilution, but when it's this strong of a downtrend, and it's especially in a penny stock, that pretty much always means that the company has at least diluted in the past if they're not currently doing so now. The other thing you want to look for that can indicate dilution is that the stocks fail to hold gains when they do spike up or when they do gap up. And you can see that happens multiple times on this chart. So if I go ahead and escape here just to show you what I mean, early on the left side here, the stock gapped all the way up to about $14 per share. And the very same day, it closed all the way back down, pretty much where it closed at the previous day. You can see that happens multiple times. When it gaps up, it fails to hold those gains, and it comes all the way back down. And on this day, it spikes all the way up. It closes pretty strong that day, but the following day comes pretty much all the way back down once again, and again on this day, again on this day, again on this day, and once again on this day. So this happens time and time again every time the stock starts to pick up some momentum and either spike up intraday or gap up in pre-market or after hours. It fails to hold those gains and pretty much comes straight back down, which can be a big sign of dilution. Okay, now before getting into some of the ideal fundamentals that you want to see when you are doing fundamental analysis and you're looking for a good opportunity to buy into a stock based on their financials, I just want to go over to BAMSECcom and kind of explain to you how it works and how you can use this to look into SEC filings. So first and foremost, I'm going to go ahead and just search in random stock. We'll go ahead and take Apple, for example. And you can see here on BAMSECcom, they actually separate the filings into different categories. So up here we have the financials, and these are going to be your 10Q filings or your quarterly earnings reports. And then of course your 10K filings, which are your annual earnings reports. And all you have to do to actually look into those filings is go ahead and click on them. And you can scroll down and look into things like their revenue, operating expenses, net sales, earnings per share, operating income, and any other fundamental analysis that you want to do. You're going to be able to find all of that information within these financial reports. Now, because these are such big filings, you can see that I can just scroll and scroll and scroll through these. One thing that I like to recommend people to do, if you're looking for something in particular, if you're on a Mac, all you have to do is hit Command F, and I believe it's just Control F if you're not on a Mac. And that's going to pull up this little search bar on the top right side of your screen. And now if you're looking for something like revenue, all you have to do is search revenue up in that search bar, and it's going to highlight every time that the word revenue is mentioned within this page. So I can go ahead and scroll through here. And doing that can save you a ton of time when you're looking through these large filings. Okay, now going back, we have the financials again there, and over here on the right side we have the news. And you can see that these are, of course, all 8K filings. Down here we have what are known as prospectuses and registrations. And this is actually where you're going to see dilution in the stock. So anytime there's an S3 or a 424B3 or 424B5 telling you that there is probably dilution in the stock, you're going to see that under the prospectuses and registrations. So for example, if I go to a penny stock, let's take SPEX, which was a recent runner in the market. And you can see right off the bat down here, prospectuses and registrations, there are multiple 424B5 filings. And if we go ahead and extend this, you're going to see probably even more, all of which is going to tell us that the stock is diluting at the time because this was such a recent one, and also has a history of dilution because there has been 424B5 and S3 filings for years and years and years in this stock. And of course, to get details of those offerings and that dilution, all you would do is go ahead and click on that. And in this case, this is an offering for 2,090,909 shares of common stock, which again is a big red flag if you're somebody that is planning on investing or buying into the stock, but can actually work in your favor if you are short selling. Now, with all that being said, I want to go over some of the basic things that you may want to look for if you are planning on buying or investing into a stock. And the first thing that many investors look for is at least 25% earnings per share or EPS growth in the past quarter and over the past 3 years. In just a moment, I'm actually going to show you how you can screen the market to look specifically for stocks that meet this criteria. And that's going to save you a ton of time from scanning the market and then having to go into their SEC filings and seeing whether or not the company is growing both quarter over quarter and year over year. But anyway, what this information tells us as potential investors is that the company is growing fundamentally and consistently. So because of the fact that we're not just looking over the past quarter, we're also looking over the past 3 years, this tells us that their growth is not just a fluke and that this is actually a growing company that is getting stronger and stronger and that is performing well. And of course, their stock is likely to follow, assuming that growth is going to continue. The next thing you want to see for ideal fundamentals is at least 25% institutional ownership. And the reason for this is simple. If these multi-billion-dollar institutions are buying into the stock and they believe in the company and they believe in the future of the company, that again is a big bullish sign. And many times you can actually have a great trade or investment by following in the footsteps of these institutions and buying into the stocks that they're also buying into. So to find stocks that are meeting both the institutional criteria and the financial growth criteria, you can use something like Finvizcom, which is a free screener. And all you have to do is go to Finvizcom, pull up the screener here. And since we're focusing on fundamentals, we're just going to go ahead and select fundamentals. But if you want to also screen for technicals, you can go ahead and select technicals or just all. So if we want to look for an EPS growth this year, again, we want to make sure that it's at least 25%. So we're going to put over 25%. Then we want to select EPS growth quarter over quarter and change this also to 25%. We can go ahead and select institutional ownership. We'll say over 20%. And each time we put one of these pieces of criteria into the screener, it's going to narrow the market down to stocks that are meeting only what we're searching for. Now you can see we have a total of 539 stocks right now, which is still quite a bit. So just to narrow this down a little bit more, I'm going to go ahead and select all. And we're going to go ahead and add in some technical settings in here as well. We of course have to make sure these stocks have enough volume for us to actually trade. So we'll make sure the current volume is at least 100,000 shares. We'll also put in the average volume of at least 100,000 shares as well. And last but not least, let's say that we want to look for stocks that are under $10 per share. So this narrowed the entire market all the way down to just 100 different stocks. And of course, that is still quite a few stocks. And if you're looking for investments or trade opportunities, you're going to want to narrow that down even more. But I hope this gives you a good idea of how you can use this free screener to put in some fundamental and technical settings to scan for stocks that are meeting your specific criteria. Anyway, that is going to be a wrap on the basics of fundamental analysis. If you enjoyed, please make sure to give this video a like and subscribe to the channel so you don't miss out on part 5 of this series. By the end of this, we're going to get into some actual trading strategies that will hopefully help you make some profits with your own trading. And as always, if you want to take your education a step further and learn everything from the basics to the strategies that I use to trade full time, make sure to visit the first link down below in the description to visit my website, Master the Market. On there, you'll learn to day trade, swing trade, and even longer term invest. You'll be given access to 70 practice quizzes to make sure that you're actually understanding all of the education that's given to you. And of course, you'll be given access to our trading chat room with over 1,000 other active traders. But anyway, thanks again for watching. I hope you enjoyed, and I'll see you in part 5.